Welcome to the CFA Level 1 Practice Test 1. Domain, Portfolio Management, Part 9. What is the standard deviation of returns for stock alpha based on the given economic forecast? A. 8.5%. B. 9.76%. C. 11.25%. D. None of the above. Answer is B. 9.76%. What is a key similarity regarding the initial impact on an investor's capital when establishing a long call option position versus a long put option position? A. Have an undefined maximum loss. B. Require an initial outlay of funds. C. Provide an immediate positive cash flow. D. Not applicable. Answer is B. Require an initial outlay of funds. Which factor is least likely to be a primary consideration when defining investment objectives within an investment policy statement, IPS? A. The investor's risk tolerance. B. The investor's return expectations. C. The investor's liquidity requirements. D. All of the above. Answer is C. The investor's liquidity requirements. What does a higher Sharpe ratio of 0.8 for a portfolio compared to 0.5 for its benchmark most likely indicate? A. The portfolio experienced lower volatility than the benchmark. B. The portfolio generated superior returns for the level of total risk taken. C. The portfolio had a greater proportion of risk attributable to systematic factors. D. None of the above. Answer is B. The portfolio generated superior returns for the level of total risk taken. What is the most likely implication for bond yields when a sudden major geopolitical conflict leads to widespread uncertainty in global markets? A. The event introduces primarily non-systematic risk, which can be diversified away, so bond yields remain stable. B. The event introduces risk fully diversifiable by combining low correlation assets, allowing yields to stay stable. C. The event introduces systematic risk affecting the entire market, requiring higher expected returns, leading to increased bond yields. D. Not applicable. Answer is C. The event introduces systematic risk affecting the entire market, requiring higher expected returns, leading to increased bond yields. If an investor's risk aversion decreases after originally determining their optimal portfolio on the capital allocation line, CAL, how will their new optimal portfolio most likely change? A. The new portfolio is above the CAL with higher but unachievable utility. B. The new portfolio on the CAL has a lower expected return and lower standard deviation. C. The new portfolio on the CAL has a higher expected return and higher standard deviation. D. None of the above. Answer is C. The new portfolio on the CAL has a higher expected return and higher standard deviation. In credit risk assessment, what does probability of default primarily refer to? A. The total monetary exposure to a counterparty. B. The estimated financial loss if a default occurs. C. The likelihood that a borrower will fail to fulfill obligations. D. All of the above. Answer is C. The likelihood that a borrower will fail to fulfill obligations. An accepted investment should offer an expected return at least as high as the expected return from which of the following? A. Designated risk-free asset. B. Historical market average return. C. Next best alternative investment with comparable risk. D. Not applicable. Answer is C. Next best alternative investment with comparable risk. Which sensitivity analysis best helps an investment manager understand portfolio risk by varying allocation weights and asset correlations? A. Changing only expected returns of assets, holding others constant. B. Adjusting individual asset standard deviations, with fixed correlation and weights. C. Varying allocation weights across a range of plausible correlation coefficients. D. None of the above. Answer is C. Varying allocation weights across a range of plausible correlation coefficients. Which CFA Institute standard of professional conduct is most likely violated when a portfolio manager invests a client's assets contra to a low-risk tolerance and capital preservation objective, stated in the IPS? A. Misconduct, Standard I, D. B. Suitability, Standard 3, C. C. Priority of transactions, Standard 6, B. D. None of the above. Answer is B. Suitability, Standard 3, C. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.